Here we are at the 28th annual La Jolla conference, and I have to say, we may have talked about lithium prior years at the conference, but this year we really talked about lithium and the role of lithium in South America and what we refer to as the lithium triangle. We're very pleased to have one of our principal sponsors, the chairman of Integra Capital, and a new board member, Jose Luis Manzano from Integra. Thanks for joining us.
No, thank you for having me. Yes, very happy of being in the conference and very happy of having this opportunity to discuss lithium. I don't think it's about lithium in South America. It's about lithium in our life today, in everything that we use with batteries. And in the near future, electric vehicles, energy storage, whatever you name, Internet of Things will relate to store the energy. And today, lithium is the only place, the only metal that allow you to do that. Huge growing demand. There is no doubt on that. Demand all over the world. This is not China demanding gasoline, it's not India demanding gasoline, it's India, China, US, Europe, South America, kids all over, people all over moving to electric vehicles, iPhones, gadgets with batteries. Right. So, and we are on the supply side. We have resources, we have people, we have experience exporting commodities. This is not a commodity, but it's a commodity-like product. So that's it. It's energy, move to energy storage, and lithium is key on that.
I want to talk about something you just said because you're not a lithium company. Integra has a lot of investments, but what brought you to lithium? But before you answer that question, you're from Argentina. Argentina has some enormous potential. It's not quite there, but it's on the way. So first talk about Argentina and then talk about how you think that your experience could be important in leveraging development of lithium.
Well, Argentina, unfortunately, there are recurrent economic crises. But I believe we have a stable democracy. We are heading a Pacific new presidential election. Yeah. And I believe we are at the end organizing the economy based on what we do better and what we are competitive to do. And that has to do with the agro industry, with the oil and gas industry, where we're just growing in unconventional copy in the US. Vaca muerta. And in mining. And in mining, you look at the Chilean side, you have 40 mining big producing projects. You look at the Argentinian side, there are 2 or 3. Yeah. So I think it's a big growth there. Lithium is one of the things. We have one of the biggest deposits. Argentina normally works well for extractive industries. So that's what we're trying to do it. And I believe if Argentina get to a big portfolio of exporting goods, including oil and gas, fishing, meat, agricultural, transform agricultural and mining, it will be a stable economy with the rule of law. So we think that this is a way. The access to US technology is free for unconventional. It's a very open information society in the US, so we have imported the US technology for unconventional. The technology for lithium extraction is accessible, so we believe the ingredients are there.
So let's talk about 2 things. One is the social license to operate, because we've had a lot of private conversations and publicly about this question. So how do you, as an investor, navigate that?
First step is you cannot do it without the communities. You cannot even dream on doing it against the community. You have to do it with the community, engaging them. They are there. They have the tool to stop it. They are scared of what you're going to do. They are scared how it's going to be after you leave in 25 years. Yeah. So it's working very close with the community and local government. It's not about promises. It's about really seeing the impact, giving job, trying to have the less environmental destruction, the lower carbon impact. So it's a context of thing. Many of them resisted by the people or that create fear. So the only way is permanent engagement and conversation with them.
Easier said than done sometimes, I imagine.
Absolutely, absolutely. And when there is no social alliance, you cannot invest.
Right.
You don't have the social license, you cannot invest. It's suicide to do something that the locals do not accept.
Of course. So let's finish with the political question and particularly this country risk. At our roundtable in Argentina, we kept talking about country risk. We've talked a little bit about today. What I want to ask you about is the economic impact of country risk. You're financing major infrastructure projects. How do you deal with that, whether it's inflation or the cost of capital?
Truth is, it has to relate to a string of dollars. If what you want to do relate to a string of dollars, you can do it. If what you do doesn't access a string of dollars, it's very difficult. We hope it changes. The 900 point of country risk, no production of dollars. You can start, you can do the initial stages, you will not complete the project. So we need the country risk to converge more with the country risk of the region.
Yeah.
That has to do with finishing the election and having or President Macri or a new president confirming that the flow of dollars is free, that the policy toward foreign direct investment stay friendly, and things will accelerate on a growth path.
So either way, you see a potential country risk decline no matter who wins the election.
No, I wouldn't say that. I would say if the electoral offers are moderate and show pre-election a commitment to market-friendly policies and normal dealing with the external debt, it will go down and you will have a new peak on investment. If the country fell in the temptation of ignoring debts or going to weird, heterodox populist policies, it will go up.
So we'll end with the easiest question of all. Who's going to win the election?
I have no idea. I wish it moderate.
Jose Luis Manzano, so great to have you here again, La Jolla.
Thank you very much.
Thank you for your support.
Thank you very much.